How to invest in REITs for passive income. Investing in real estate investment trusts, or REITs, can be an excellent way to earn passive income and diversify your investment portfolio. These companies own, operate, or finance income-producing real estate in a variety of sectors. Whether you're a seasoned investor or just starting out, understanding how to invest in REITs can provide ongoing returns and financial stability. The first step in investing in REITs is to understand the different types available. There are equity REITs, which invest in and own properties; mortgage REITs, which lend money to real estate owners or invest in existing mortgages; and hybrid REITs, which combine both equity and mortgage investments. Each type carries its own risks and benefits that you should consider based on your financial goals and risk tolerance. Once you've decided on the type of REIT, conduct thorough research on the potential investments. Look into the management team, their track record, and the sectors or regions they focus on. Evaluate the REIT's financial health by reviewing its revenue growth, dividend yield, and payout ratio. Websites like REIT provide resources and valuable insights into the performance of different REITs. Next, assess the tax implications. REITs must pay out 90% of their taxable income to shareholders in the form of dividends, which are taxed as ordinary income. Factor this into your investment strategy, as it might influence how much you choose to invest. To buy REITs, you can either purchase them directly through a brokerage account or invest in REIT-focused mutual funds or ETFs. This can offer increased diversification and reduce the need for extensive individual research. Remember, like all investments, REITs come with risks, including market fluctuations and property value declines, so it's crucial to maintain a diversified portfolio. Investing in REITs can be a rewarding endeavor if approached with diligence and awareness.